Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel says it has begun targeted ground raids in villages close to the border in southern Lebanon, defying international calls for restraint. Markets digest comments from Fed Chair Powell, which were less dovish than earlier, suggesting he's in no hurry to lower rates. Plus, global supply chains at risk due to a strike of U.S. dock workers, which impacts commodity exports to China and other parts of the world. It's just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Before we get you the latest on the developments in southern Lebanon, let's just take a recap of how markets have fared in the last 24 hours. And what we did see was by the end of the session, Wall Street did close in the green, despite some less dovish comments than anticipated coming through from the Fed Chair Jerome Powell. He was speaking yesterday, and he said that they will not be in a rush to lower interest rates, that they will lower interest rates gradually over time, therefore not really cementing the interest rate cuts that are priced into the market. That being said, S&P and Nasdaq did manage to eke out some gains by the end of the session. Today, S&P futures are trading sideways. The 10-year yields we saw move 3 basis points higher after Powell's speech yesterday, so 3.78 is where we are right now. And it continues to be a case of buy the rumor, sell the fact when it comes to Fed commentary in the last couple of weeks. The USD also gaining some ground yesterday with some of the less dovish commentary. So the USD now about 6 basis points firmer. And then Brent, once again in focus, cannot sustain a bid despite the geopolitical situation in the region flaring up once more. Brent sitting just shy of $72 here. Later on in the show, we're going to be talking about some of the political agreements that have been reached in Libya, which means that a resumption of supply out of Libya could be one swing factor for that market that we're paying close attention to. And the terminal chart for today, even though China, Hong Kong and South Korea are closed for trading, I did think it was worth just pointing out that the CSI, the Chinese index, has seen its best week since 2008. So all of this on back of that mega stimulus package announced last week. CSI up more than 20% just in the last 3 sessions. And if you look at that and look at the chart that we're showing you there, it just indicates how much of a move and how big of a move we've seen in these Chinese indices going all the way back to 2008. But back to the region. Israel says it has begun what it describes as targeted ground raids in southern Lebanon, defying international calls for restraint. The military has been striking targets in villages close to the border that pose what it says an immediate threat to communities in northern Israel. For more on this, Bloomberg's Paul Wallace, who leads our MENA economy and government coverage, joins me now. There had been speculation for weeks that a ground incursion was imminent. Now we know it has begun. What do we know?
Exactly. Jemana, as you said, it wasn't inevitable, but it seemed increasingly inevitable in the last few days, given what Israel was doing with its airstrikes into Lebanon. So far, the Israeli military is emphasizing that these are limited raids. They're describing them as limited ground raids in the very south of Lebanon. They're going after what the U.S. is describing as attack infrastructure, or Hezbollah's attack infrastructure that potentially could be used if it's not destroyed for an October the 7th style attack on Israel. So that's what they're doing at the moment. There's very limited information now. We know these raids started at roughly midnight local time last night. Yeah. The U.S. has already been in touch with Israel. It's sort of saying that it agrees that this attack infrastructure needs to be taken out, but it is still emphasizing the need for diplomacy as well, and it certainly doesn't want Israel to make these limited ground raids or turn them into something much
larger
bigger.
Conflict. Paul, do we have any indication whatsoever for how long these ground attacks or the ground incursion is going to go on for?
That's a key question. In the last few weeks, Israeli officials have been implying that if there was a ground incursion, they needed to make it short. They were talking about, maximum, 2-3 months, and ideally much shorter than that for all sorts of reasons. They don't want to get bogged down. They don't want to suffer heavy losses. They are now fighting on Hezbollah's home turf, which a lot of people think is very much going to play into the militant group's hands. The problem, of course, is that Israel has been here before. In 1982, when it went in, that was meant to be a pretty limited incursion into Lebanon. It turned into an 18-year sort of occupation of parts of the country.
Yeah.
I don't think anyone is suggesting that at this stage, but there are a lot of people saying that it will be extremely difficult for the Israeli military to achieve what it wants in a matter of days or even a matter of weeks.
What is the international community saying? You mentioned that the U.S., to a certain degree, said it had supported some of the efforts to take out key infrastructure targets, to use the phrasing. But has there been any attempt at mediating a ceasefire?
There has, and we saw that last week around the UN General Assembly when Israeli Prime Minister Benjamin Netanyahu was there. There were certainly big efforts by the US, by France, by Saudi Arabia, by some other Arab states to essentially not get to the point where we got to last night, which was Israel sending in troops. They didn't want that, but I think Israel made it clear that it felt it had no choice, that it could not leave Hezbollah fighters close to its borders. Obviously, it wants to get its displaced northern civilians back home, and it doesn't think it can do that if, literally hundreds of meters away, there are a lot of Hezbollah fighters. So Israel is saying it had no choice but to do this.
And of course, capitalizing on a moment of weakness for Hezbollah after everything that's happened the last 2 weeks.
Exactly. The group is on the ropes very much.
Yeah. Paul, thank you so much for bringing us the latest developments. Bloomberg's Paul Wallace leading our MENA economy and government coverage. Thank you. Well, Chinese, Hong Kong and South Korea's markets are closed for holidays. So let's check in with Yvonne Mann on how other markets are trading. And certainly there's been a lot of focus on some of these Japanese markets, given the political developments over there. Yvonne.
Yeah, pretty quiet day, Jumana. But as you say, Japan getting a bit of a pressure off themselves a little bit, just given the volatility. We saw that 5% drop yesterday. We've made up a little bit of that in the Nikkei 225, we're up 2%. But that really was due to maybe Powell and some of those slightly more hawkish comments that you mentioned as well. That really sent the dollar higher. So that's why you're seeing dollar yen at 144 level, so slightly on the weaker side. And even some of these Asian currencies that were really big beneficiaries of that 50 basis point cut just a few weeks ago from the Fed, that's also tapering off a bit. So some weakness in the ringgit, for example, by more than 1%. But yes, that certainly gives some relief for equity markets here today. We're up 2% for the Nikkei 225. But mind you, of course, Ishiba, that shocking win from what likely to be the Prime Minister of Japan. He's still calling for an early election in October. So expect possibly a bit more turbulence in these markets in the few weeks to come as we embark, of course, on this new quarter and new trading month as well. And you talked about China being shut. It is really, really, in terms of what you're seeing in the proxies here, you're not seeing the same sort of euphoria that we saw the last few sessions as well. In fact, things have actually taken a bit of a break here this morning. You take a look at how futures are looking like in China. That's down some 1%. Dollar China, you take a look at markets like iron ore, for example. Those are some of the key beneficiaries of the stimulus splits are tapering off here today. The likes of some of these miners as well as BHP in Australia is down some 3%. Jumana.
Maybe a little bit of profit taking coming in there. Yvonne, thank you so much for the report. So Yvonne Mann, co-anchor of the China Show in Hong Kong there. Well, coming up, State Street Global Advisors says U.S. economic data appears to support market expectations of a soft landing. More on their investment strategy next. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. A strike by dock workers in the U.S. is set to go ahead after no 11th hour deal was announced. The U.S. Maritime Alliance says it has offered to boost wages for dock workers by nearly 50% in an effort to resume negotiations. But a spokesperson from the dock workers union says they are not aware of any such offer. The strike is expected to widely halt operations at East and Gulf Coast trade gateways. Bloomberg's Danny Berger has more.
As of 12:01 a.m. Eastern on Tuesday, the International Longshoremen Association will be going on strike. They represent some 45,000 members across 36 ports across the entirety of the East and Gulf Coast of the United States. That's about 50% of the trade that comes into America that will be unable to. They are striking over two matters that they're unable to come to agreement with their employers on. One, it is pay. They want an 80% increase over the next 6 years. Additionally, they want language written into the contract that bans continued automation of these ports, automation that is present in places like Asia and Amsterdam. But the fear here is that they would lose jobs. Now, while the strike is going on, there are industries that will be affected. For example, car imports coming in through the south of the U.S. and things like fresh fruit coming in to the north. Because of that, government officials are urging a quick resolution to this. Here's what New York Governor Kathy Hochul had to say.
I urge U.S. MX and the ILA to come to an agreement that respects workers, that ensures the flow of commerce through our ports, and the stakes are very high. The potential for disruption is significant.
Now, most experts think that this will be wrapped up in just a matter of days because there is significant pressure and leverage that the longshoremen have. For one, there's a supply-demand issue. There's not enough workers who want this job, and they have a very friendly administration on their side to labor. So as these talks unfold, the government will help facilitate them, but it will have economic repercussions. According to J.P. Morgan, for every day that there is a strike, it will cost the United States nearly $5 billion. Danny Berger, Bloomberg News.
Wow, that's quite the figure. $5 billion for every day the strike goes on. Well, Fed Chair Jay Powell says the central bank will lower interest rates over time while reiterating confidence that inflation is moving towards the 2% target.
Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting.
Let's bring in Mehvish Ayub, head of Investment Strategies MENA and OCIO at State Street Global Advisors. So Powell, they're saying that they're not on a preset course. He sounded slightly more cautious, I would say, than the dovish commentary that we've been receiving the last couple of weeks, and certainly that 50 basis point rate cut that came through a few weeks ago. What do you make of his comments overnight?
So actually, I think the issue is that policymakers are somewhat regretting how they've indicated to markets what their policy is going to be. Markets tend to get ahead of themselves, so you can very much see, even whether you look at the US or you look at China, markets really sort of pricing in that dovish pivot from the Fed and that bazooka stimulus from Chinese policymakers. So I'm not surprised there's a little bit of dialing back of expectations. Our core view has been that we're likely to see 100 basis points, excuse me, by the end of the year, and we're still sticking to that, so another 50 basis points. The timing of that is very uncertain. It's very much dependent on sort of US election dynamics. It's also very data dependent, so we'll have to wait and see, but I think that's a very sort of a clear and moderated approach, which is what the Fed wants to signal to the market.
Yeah, another big data point coming up this week with NFP on Friday.
Yes.
How do you see the signals coming through from the U.S. economy right now?
So I think it is a bit of a mixed bag. I was concerned that the Fed starting their cycle with 50 basis points was perhaps suggesting they're a little bit behind the curve and they're more concerned about the labour market data. So the unemployment rate, which they've indicated might be as high as 4.5%, is a bit of a concern. There's been a very gentle downtrend in NFP over the last couple of months, so the downtrend is definitely there, but it's just a case of looking at the fact that the absolute numbers are still positive. So they're still adding jobs to the economy. And if you think about a typical US recession, those payrolls tend to go negative. So I think the data is still a risk point for markets come to Friday. If it comes out less than expected, I think markets will be disappointed and they'll react just because they're quite frothy at the moment. But in terms of it, it's not a huge move away from what we've been seeing in the last few months.
And of course, the Fed are placing a lot more emphasis these days on the jobs market data and less so on inflation. My question is, maybe they're ignoring perhaps some things that are happening around the world now that could provide inflationary shocks. We talk about the dockworker strike.
Yes.
Our colleague was saying that it could cost the U.S. economy up to $5 billion a day. That's a substantial amount. You talk about some of the geopolitical risks that are emerging. Is there not perhaps an element of complacency about inflation being on track and heading back to target?
I think you make a really good point, and I think that is one of the key risks out there, that over the next couple of months, the Fed has always said to markets that it's data dependent. And so, yes, there is. I do think, however, what you've mentioned is going to take time before it filters through to the markets. If we think about the energy market, what's really surprising to me is post the China stimulus, post the awful escalation in the Middle East, we've not really seen oil prices move up. And so to me, that suggests that it's very much about the supply and demand dynamics. We know there's more supply coming on from OPEC and non-OPEC members. And we also know that the expectations for demand are a little bit lower. I don't know about you. I recently bought an EV. I don't know, whether EVs have a lot to do with that. But, projecting that out, that is what the oil market is reflecting. So that is not necessarily a great sign for global growth expectations in the medium term.
Yeah. Let's talk about the other big event last week, and that was the unveiling of the big China stimulus package. Chinese markets are closed today, but we've seen a massive rebound in Chinese equities. I'm a bit surprised to see it hasn't really had ramifications on U.S. markets. U.S. markets sort of came in, saw the session and brushed it off. Is it a case of what happens in China stays in China?
Yeah, exactly the point. And actually, China is a great diversifier for a broad equity portfolio. It seems to be very much on its own path. It's all about what the policymakers, it's actually very much driven by policy and trying to encourage international investors back into the market. We actually went overweight emerging markets with a view in China a couple of months ago, but that was very much to do with the valuation differential between developed markets and emerging markets more broadly. But yes, there's been a lot of chatter in the markets about that sort of certainly monetary easing. The fiscal bazooka-style stimulus is definitely a surprise. And I think it is very positive for Chinese assets in the medium term. But again, I don't think policymakers are going to be happy to see equity markets up 15% last week and 8% just yesterday.
Yeah.
So there could be some dialing back. And I think before you see those policies translated into the economy and into the actual stocks is going to take time.
Yeah.
So it's just, again, another case of markets getting ahead of themselves.
Well, stock markets are not a reflection of the real economy, not necessarily. Yeah. Mehvish, thank you so much for coming on the show today. Very nice to chat to you. Mehvish Ayub, Head of Investment Strategies MENA, OCIO at State Street Global Advisors. And coming up, South Africa's Deputy President, Paul Mashatile, tells us why he's confident that the economy is turning a corner. Details of his growth forecast next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South Africa's benchmark bond yield fell below 10% on Monday for the first time in more than 2 years. That's as the deputy president amplified growing confidence the continent's biggest economy is turning a corner.
We want to say to the investors here, come to South Africa. We are open for business. We want you to come and invest in various sectors of our economy. We think that by next year, we could be growing at about 1.5% of GDP.
Well, for more, let's bring in Bloomberg's chief Africa correspondent, Jennifer Zabazaja. That was the deputy president there talking up the prospects for the South African economy. What else stood out to you from that interview?
Right, Jumana, I mean, really what we heard from Paul Mashatile is that he was trying to build on what we heard from the president just months ago, which he essentially said that, yes, South Africa is open for business, but also they want to see South Africa turned into a construction site. And what he meant by that is that they want to continue to see investment into infrastructure and into other parts of the economy to help get things going. But Paul Mashatile was in the UK trying to woo investors and tell them that this new coalition government that many people call market-friendly, business-friendly, is on the right track. He said he believes that growth could actually outpace the growth that we've seen from the economy for the past decade. And not just that, I mean, he did note some of the highlights that we've seen, notably energy interruptions with power outages have actually subsided to a certain extent. I think we're nearly at 200 days since planned power outages. Also, we've seen some improvements in the transport and logistics sectors. And so he really believes that investors, now is the opportunity for investors to come in to invest in sectors such as renewable energy and other areas. But still, there is a long road ahead. He did note that, of course, maybe energy has subsided to a certain extent, but water has become an issue potentially. Later today, we'll hear from the president to talk about phase 2 of the business and government partnership. So we'll see if this GNU can continue this momentum that investors are really, they seem to be bought on at this point in time.
And just taking a look at some of the key South African assets, we talk about the outperformance of the rand into and actually out of the elections. It's about 6% stronger versus the USD over the course of this year. But in general, more broadly, how have South African assets done this year?
It's interesting, Jumana, if you take a look, especially on Monday, right, we did see EM equities dip ever so slightly, especially after we heard from Jerome Powell. But if we look at, you just mentioned the rand, we're actually seeing, there's the chart right there. We've seen the rand on track for its best third quarter since 2016. Not just that, the FTSE JSE, which is the main index here, has actually also, it's up nearly 10% over the past 3 months. And it's actually outpacing the MSCI EM index. So clearly investors are bought into, at this point in time, we have to note that it's still just about 4 months into this new government, but clearly they are bought into the track that this government and a lot of the partnerships that they are investing in are on. And even some strategists are saying that potentially the opportunity is really on the long end of government bonds, because a lot of the fiscal discipline and the fiscal reforms are not actually being priced into the market right now. So on a good path for South Africa, which is very welcome considering a lot of the dips that we've been seeing over the past years. But still, you know, we saw the rand dip really close to 17 rand to a dollar. It ticked back up by the end of Monday, but still on a relatively upward trajectory for the economy.
Yeah. Yeah. Well, at one point this year was trading with the 19 handle, so it has come a long way. Bloomberg's chief Africa correspondent, Jennifer Zabazaja, with the latest on the South African economy. Quick look at equity futures before we head to the break. The handover from Asia is pretty positive overnight. Many of these markets are actually closed, though. China and Hong Kong, South Korea, all closed. But futures leaning sideways as we head to this break. In a moment, we're going to be talking more about the geopolitical developments in the region, as Israel says it has started a limited ground invasion into Lebanon. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel says it has begun targeted ground raids in villages close to the border in southern Lebanon, defying international calls for restraint. Markets digest comments from Fed Chair Powell, which were less dovish than earlier, suggesting he's in no hurry to lower rates. And Libya prepares to revive its halted oil production as its central bank crisis eases. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, the focus for markets yesterday was a speech that the Fed Chair Jerome Powell gave at the NABE, that is the Business Association, where he suggested that further interest rate cuts would be dependent on the data. So no real surprise there. But some of that cautiousness was interpreted as hawkish commentary. And so on the back of that, we saw the strengthening of the USD. We saw yields back up a couple of basis points. But by the end of the day, Wall Street did close in the green, slightly higher for both the S&P and the Nasdaq. S&P futures not doing much today. We're trading sideways. 10-year yields 3.78. We closed up 3 basis points yesterday. USD slightly firmer as well, bucking the recent weakness as of late. And then Brent also in focus today, just sitting below $72. So we dropped yesterday despite the flaring up of the conflict in the region, which we'll talk about that shortly. And switching over, I just want to as well shed a little bit more light on the price action that we got out of China in the last week. And of course, these Chinese markets are closed overnight for trades. But this just encapsulates how big a week it was for trading in some of these Chinese indices. The CSI index up more than 20% in the last 3 trading sessions. It closed up more than 6% higher yesterday. It's seeing its best week since 2008. So really, this chart just highlights how big a week it was for China and the very forceful response we saw to the stimulus enacted, both from a monetary policy perspective and fiscally as well. But let's also check in on how other markets in Asia are faring today. Yvonne Mann is in Hong Kong running us through the latest.
Yeah, you mentioned with China shut, it gives us some time to look at other themes as well. And I think it is still Jay Powell's comments that really is igniting this dollar trade once again. So the dollar is stronger across most Asian FX here today. And you're really seeing in the ringgit, Thai baht, the Taiwan dollar, for example. These are some of the key sort of beneficiaries of the Fed easing cycle. Now we're seeing a bit of profit taking here. So dollar yen certainly is one of those as well. We're seeing that weakness here across the board. And the key we want to mention here today, with a local bank, BNZ, now saying they could cut 50 basis points next week as early as that following the Fed. So there you go. That's why you're seeing the Kiwi drop as well. In terms of what individual movers are tracking, there's not a whole lot out there, but we are tracking these trading houses in Japan here today, all of which are rising on the back of what we're hearing with Berkshire Hathaway. Looks like they have hired some banks for this potential yen bond offering. We've been reporting this for a few months now, that this yen bond offering could maybe give Berkshire a bit more cash to buy more stocks, and that's why you're seeing these trading houses rise on that news.
Yvonne, thank you so much. Yvonne Mann in Hong Kong there. Now, the Israeli military says it has begun what it describes as targeted ground raids in southern Lebanon, escalating its campaign against Hezbollah despite international appeals for restraint. Israeli Defense Minister Yoav Gallant told forces deployed along the border with Lebanon the killing last week of Hezbollah's leader Hassan Nasrallah was not the final step. Lebanon's health ministry says 95 people were killed in Israeli airstrikes on Monday. Meanwhile, Washington has reportedly cautioned Prime Minister Benjamin Netanyahu against a larger and longer-term operation that could risk a direct confrontation with Tehran. For more, we're joined by Ian Parmeter, research scholar at the Australian National University Centre for Arab and Islamic Studies, and someone who knows a lot about the region and Lebanon. Let me just start off by asking you, what do you think Israel are hoping to achieve out of what they're calling targeted ground raids?
Yes, they're also calling them localized, which I think is code for going up to the Litani River, which is about 30 kilometers or around about 30 kilometers north of the border. And I think what they'll be trying to do is certainly to clear out any Hezbollah operatives who may be in that area, although I doubt that there would be. I think there's been an enormous movement of people north of the Litani River. But what they'll want to do then, I think, is look to find any caches that Hezbollah might have used for storing weapons, and also to destroy tunnel networks that Hezbollah is reported to have dug. So they'll have those objectives in mind. I think essentially what Israel is trying to do at this point is to take advantage of the disarray in Hezbollah following the killing of the leader, Hassan Nasrallah, and 8 out of its 10 senior military commanders and about half of its political leadership structure. So they've, in the last 2 weeks, Hezbollah has suffered grievous harm as far as Israel is concerned.
Yeah. So Hezbollah are in a state of disarray, but I've had conversations with many people over the last couple of days, and the feeling is that, yes, they're down, but they're not out. And the reason that Hezbollah is not completely out is because they have, over the years built up a substantial fighting force. The numbers vary, but anything from 60,000 to 100,000 fighters is what people cite, in addition to quite a substantial missile base as well, and it's estimated that they're sitting on target rockets of more than, again, 60 to 80,000 long-range missiles, depending on who's looking at it. And so how easy is it going to be for Israel to achieve those military objectives, given the sheer size of both the fighting force and the arsenal that Hezbollah are sitting on?
Well, you're absolutely right in terms of the size of Hezbollah. It's a very large organization, and Israel significantly hasn't listed the destruction of Hezbollah as one of its war aims, in the way that it's listed the destruction of Hamas as a war aim in Gaza. What it's trying to do is to re-establish his deterrence against Hezbollah, so that although Hezbollah has this very large number of trained militants and battle-hardened militants too, because they fought in the Syrian civil war, and up to 150,000 rockets, drones and missiles, they essentially want to reach an agreement either through resurrection of UN Security Council Resolution 1701, which ended the 2006 war, or a de facto agreement with Hezbollah that Hezbollah will stop firing across the border, and that Israelis, the 60,000 or so who have been displaced from their homes in northern Israel, will be able to return. If Israel can achieve that, I think it will be happy with the work it's done. But I should mention that Hezbollah, I agree with the others you've spoken with, Hezbollah is not out. It will be reconstructed, and significantly, I've just been reading recent reports that Iran has sent a team of Islamic Revolutionary Guard Corps personnel to help Hezbollah sort out its leadership structure again, and essentially to get secure communications that haven't been interfered with. So Hezbollah will be back on board. It may take it a while, it may take a few weeks, it could take a few months, but it will remain a danger to Israel.
Yeah, let's pick up on what you said there vis-a-vis Iran sending IRGC to help Hezbollah regroup, not necessarily fight, but regroup their command structure and rebuild their telecommunication devices. What do you make of Iran's stance towards Hezbollah and towards the broader conflict in the last couple of weeks, given the escalations that we've seen occurring on that Lebanon border?
Iran has always regarded Hezbollah as an insurance policy against a major Israeli or United States attack on its nuclear facilities hidden in very deep caverns and caves and various underground structures in various parts of Iran. Now, the theory is that if there were to be an attack on these structures in Iran, that Hezbollah would then be given the green light from Iran to unleash its full barrage of weapons, and it could fire up to 3,000 per day, which would overwhelm Israel's missile protective system, both Iron Dome and David Sling. Now, I don't think that calculus has changed with Iran. Iran doesn't want to get involved in direct fighting again with Israel. It really knows that it doesn't have the strength to do that at this point. Its main aim at this stage is to reconstruct Hezbollah so Hezbollah becomes the sort of force that will be able to threaten Israel again.
Yeah, very clear. Ian, always great to have you on our show. Ian Parmeter, research scholar at the ANU Center for Arab and Islamic Studies. Thank you very much. Saudi Arabia has slashed its economic growth forecast for years to come. The kingdom is projecting deeper budget deficits than previously estimated, as spending is seen outpacing revenues. Economic output is now seen growing less than 1% this year versus previous forecasts of almost 4.5%. So joining us now is Christine Burke, our Saudi bureau chief in Riyadh. This seems to me like a bit of a mark to market in terms of where Saudi Arabia see its own economy headed in the next few years. What were the key takeaways for you, Chrissy?
Well, we got these fresh projections late last night from the finance ministry in the pre-budget statement for 2025. And it really did deliver a double whammy in terms of us seeing a worsening outlook for economic growth and also for the government's budget balance. When we look at the GDP figures in particular, and specifically for this year, there was quite a deep revision. But honestly, I looked up and down this report and there was nothing explicitly in the statement that suggests why exactly such a deep revision that was made. I think it's probably safe to assume that a large part of this comes down to the fact that Saudi Arabia has had to carry on with oil production cuts for longer than expected. And it probably factors in a bit more modest growth in terms of non-oil growth in the non-oil industry. Now, when we look at the budget deficits, the government is now forecasting wider deficits for 2024, 2025, and also 2026. And new projections for 2027 show that the deficit will ultimately deepen to reach 3% of GDP by 2027 that year. And it attributes a lot of this to what it called, quote, expansionary spending policy. You have to remember Saudi Arabia is undertaking these huge investments and spending programs in order to drive the Vision 2030 agenda to diversify the economy away from crude oil. But the reality is that this is a government that remains heavily reliant on oil revenues, and weak crude prices are challenging its budget. And when we do look also to revenue projections for 2025 and 2026, the government did cut those projections and said that part of that was down to the fact that it does take a cautious approach in terms of where it sees oil revenues coming in years to come.
Yeah. And Chrissy, just given these widening budget deficits, did Saudi Arabia mention anything about their funding plans and how they plan to keep funding on these deficits in the years to come?
Yeah, they did actually. So they made it very clear that they intend to continue tapping debt capital markets. Already, we've seen Saudi Arabia is a leading issuer of sovereign debt among emerging markets so far this year. So it seems like that will continue. The finance ministry specifically said that it will continue to issue sukuk, general bonds, and also that it will look at loans. Additionally, on top of that, it said that it will look at alternative financing that will allow the government to fund some of the major infrastructure projects that are going on across the kingdom. So it sounds like we can continue to see more debt to come. But it should be noted that Saudi Arabia remains to have a pretty low debt to GDP ratio. So it can carry on it can carry on borrowing for extended periods of time without it being a real concern.
Christine, thank you so much for that report and the latest on the Saudi economy. Christine Burke, our Saudi bureau chief in Riyadh. Now for a look at some of the other stories we're following. Qatar Airways plans to take a 25% stake in Australia's Virgin Airlines. The Gulf carrier plans to acquire the minority stake from Virgin Australia owner Bain Capital once regulators give approval. Australia's government last year denied Qatar's bid for more flights into Sydney, and Virgin is trying to challenge Australia's dominant market player Qantas. The UAE's ADNOC is reportedly set to clinch a $13 billion deal to buy Germany's Covestro. The Wall Street Journal cites sources saying an announcement could come as soon as this week. Bloomberg reported in late August that ADNOC was close to completing due diligence on the German chemical company after more than a year of negotiations. And coming up, a housing crisis is brewing in Rwanda's capital after the population roughly doubled in the last 20 years. We are live in Kigali next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Let's turn our focus now to a growing housing crisis in Rwanda as rural residents descend on Kigali looking for opportunities. The capital's population has roughly doubled in the last 2 decades, creating huge demand for decent housing in one of the world's poorest countries. So for more on this, Bloomberg's Andiro Ganga joins us from Kigali. Andiro, fascinating report. Why is affordable housing becoming a crisis now?
Jumana, it's important to understand that this is Africa's 4th smallest country. Yes, it's one of the most densely populated. If we take a look at Kigali, population set to more than double from the current 1.7 million to about 4.5 million in 2030. People are flocking the urban areas looking for employment. As you rightfully mentioned, this is among the poorest countries in the world. And the World Bank estimates that in as much as 500,000 jobs were created in the 4th quarter of 2023. These are low-quality jobs that, are not dependable, and they're in the informal sector. These people have to live somewhere, and they are then forced to rent out mud brick structures with shared amenities such as bathrooms and toilets. And this is the reality of 75% of the population that live in unplanned settlements where they have limited access to water, electricity, sanitation, and transport. And it is to this end that the government partnered with the private sector and the World Bank to try and plug into that affordable housing hole, which the Rwanda Housing Authority estimates at 25,000 units annually.
But obviously, there are noble intentions surrounding these plans, but it hasn't really transpired the way the authorities thought. So what exactly went wrong?
Jumana, a couple of things went wrong, but there are some things that went right. When I was doing this story, I spoke to Adi Group Limited CEO, one of the companies that is partnering with the government to deliver affordable housing. And he was telling me that among the things that attracted that company to Rwanda include tax incentives from the government, business-friendly environment, and affordable and constant supply of energy. About 70% of the units from their pilot phase are sold, and they're expected to deliver about 2,208 units by 2027. Be that as it may, there's some things that went wrong. One, developers gravitate towards high-end projects because the margins of profit are higher as compared to affordable housing. The currency last year depreciated 18% to the dollar, and all these are costs that are passed to the consumer who's supposed to be consuming affordable housing. There's also culture. People prefer standalone houses as opposed to community living in affordable housing for a country that's only 10,000 square meters long. So something has to give. The government is going back to the drawing board, the lessons that it has learned in the last 10 years, because they've only delivered 2,600 units, and now they know what went wrong, and hopefully they'll put that in the new strategy that they'll be implementing in the next decade.
Fascinating report. Around 35% of Rwanda's population will live in urban areas by 2030. So you can see why the impetus is there to get this fixed. Bloomberg's Andiro Ganga, thank you so much for bringing us that analysis. Well, the World Bank has approved a $1.57 billion in new lending to Nigeria for healthcare and climate projects. The financing package is aimed at strengthening health for women and children and developing dam safety to improve resilience to climate change. The Washington-based lender says the funding will help Nigerians facing complex difficulties. Coming up, Libya is set to resume oil production today after weeks of disruption halted production. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Libya is said to be preparing to fully restore oil production from today after weeks of disruption. Sources say an announcement is widely expected after the country's rival governments agreed on a new central bank governor. So let's bring in our Middle East energy markets reporter, Anthony De Paula, who has been tracking the story since all of the issues within the Libyan government kicked off a couple of weeks ago. And obviously that did disrupt supply. So just to bring us up to speed on the latest and the impact that could have on the oil market.
Good morning, Jumana. Yeah, we have been discussing this since kind of the late days of August, when there was that spat over control of the central bank in Libya. There are two feuding governments there that control variously different aspects of oil, as well as the central bank being key for how that oil money is spent. So we saw Libyan production, which is about 1.2 million barrels when they're fully producing at the moment. Of course, in the past, it had been higher than that. We saw that less than half, so around 450 barrels a day that they were coming out with. So that did have some impact in the market. But we've seen a really weak third quarter. So we've just gotten out of a really weak third quarter. We're coming in the low 70s right now for Brent crude. But the market has been looking at that imminent return. Once that Libyan oil did come off, there were a lot of efforts, a lot of political and diplomatic efforts to try to get that central bank spat resolved. So traders saw that oil potentially coming back into the market, saw a potential solution to that issue. And don't forget, we've also got the issue of potentially OPEC plus oil production coming back later in this quarter at the start of December. That's the plan, where Saudi Arabia, Russia, and some countries that have made voluntary cuts are supposed to start bringing that back. That, along with concerns over demand in China, those are the things that have been weighing down on the price, so kind of keeping us really low during this last third quarter, Jumana.
And Anthony, quickly, but it's important, the oil market seems to be completely shrugging off the latest regional developments and the rising escalation between Lebanon and Israel. What do you point that down to?
Yeah, so far the oil market has been very relaxed about those issues. Aside from the human cost that's going on in that part of the region, there hasn't been an impact on physical supply. So that's really what the market is looking at. A year ago, when there was that initial Hamas attack into Israel, there were a lot of jitters, some knee-jerk reactions. But since then, the market has really looked through that and looked to the fact that physical supplies have not been disrupted. And really the issue is whether Iran would get more or less involved and try to impact some of the flows out of the Persian Gulf. So that's really the issue that the market is looking at, Jumana.
Yeah. So far, no disruption, though. Anthony Powell, our energy reporter over here in the region, thank you very much for the latest. Well, that was Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.